All right, welcome back to another webinar, everyone. So in this webinar, once again, this is a trader development webinar. We are going to cover some psychological issues that people have in trading. So in this webinar, just ask any questions you guys have that relate to trading psychology, right? If you guys have any questions related to trading itself, ask that on the Tuesday webinar for the Q&A webinars. So this week, we are going to focus on the following topic. Why do I always give back profits? So a few members have reached out and they said, hey, can you please talk about this topic in particular, that they always have a hard time keeping profits. They're making the right trades, they're getting at the right time, but at the end of the day, their P&L is always red. Why is that happening? So I'm going to focus on this topic, and as I progress, you guys can ask questions in the question box. And once I am done talking about this topic for a little bit, I will then jump over to the question box. And once again, in the questions, ask everything related to trading psychology only. All right, so why do I always give back profits? Now, as I mentioned in the previous webinars, a lot of times things that relate to trading psychology, it's hard to give one answer. So for me to say, oh, you're giving back your profits because of this reason or that reason is not fair, because every trader kind of has different reasons, and I'm going to lay out all the different reasons so you guys can kind of outline and identify what your reason may be. Now, what tends to happen in trading is there's a few people that obviously get to a certain level, and that level becomes where you become very confident, right? You become super consistent in making money. You know when to get out. You have proper risk management. You get to a good trading level, which is great. Now, the problem that happens at that level is a lot of people that make money don't know how to keep it, right? Because a part of trading is to be able to make money. And then the second part is, okay, you made the money. How do you keep the money, right? So I think a lot of people have and do reach this point of being able to make money, but keeping it becomes the next challenge. Now, obviously, if you're at this point where you're making money, that's phenomenal, that's great, and you shouldn't be discouraged if by the end of the day you're giving money back. It just means that you're at another stage of trading, right? And as you get to more and more stages, you're gonna come across different problems, and those problems, the whole goal of these webinars is for us to tackle those problems and kind of progress from there. So if you're facing that problem right now, don't be unmotivated. Just understand that that's part of the progress, that's part of the process, so it's totally okay, right? Now, what tends to happen is a lot of people get to this point, as I mentioned, they make money, and then by the end of the day, the P&L is red again. Now, this comes down to a few different reasons. Now, some of the reasons that happen are A, you overtrade, right? That's number one. I want to break all of these reasons down. One thing is people overtrade. Now, it's kind of like, okay, what do you mean I overtrade? Now, overtrade can happen in a lot of different situations. Even when you guys make money, let's say you trade tomorrow, in the first 30 minutes, you made $500. Overtrade can still kick in, because what tends to happen is because you've made 500 in maybe 30 minutes, or you made 5 grand in 30 minutes, automatically you start doing the math. Okay, if I did this in 30 minutes, imagine what I can do in another 30 minutes. So your mind starts having mental blind spots, and those mental blind spots don't focus on trading, but more so focus on your progress in 30 minutes or 15 minutes or 5 minutes. And then you're like, okay, what do I think I can do in the next 20 minutes or next 30 minutes, right? So that's where one concept of overtrading kicks in. Now, I mentioned this a lot. I talk about it a lot. You know, when you guys are trading, guys, it's super important to kind of track your mind, track yourself, understand yourself. Hey, what happens when I make money? What happens when I lose money? What happens when I'm on a winning streak? What happens when I'm on a losing streak? What happens when I have a lot of things going on in my life? What happens when I make a lot of money in a short period of time? You should know the answers to these questions, and when you do know the answers, that's when you get to a higher elite level, right? Because then it's kind of like, hey, I know whenever I make a large sum of money in a short period of time, my trading gets bad after. Why does my trading get bad after? It gets bad after because my ego kicks in. I get overconfident, right? After I get overconfident, I start taking on shittier trades, and those shittier trades start messing with my following trades. So that's the first thing you need to understand. Okay, why is this happening, right? After you understand why is it happening, the first reason, as I mentioned, could be you're overtrading. And the over trading could be because you're too confident, you made a large amount of money in a short period of time. Second reason a lot of people kind of give away profits is because they think, and this is a lot of people, they think that the idea of trading is to sit in front of your computer from 9:30 a.m. Eastern Standard Time when the market opens till 4 p.m. right? So they kind of look at it as a job. They're like, okay, the market opens at 9:30 a.m. It closes at 4 p.m. Eastern Standard Time. Why would I get off at 10 a.m.? Why would I cut off at 11 a.m.? It doesn't make sense to me, right? Because I can keep trading and keep making money. Now, what you have to understand, guys, is that the first hour of trading is kind of like, that's where the most volume happens. That's when there's the most activity. You have the most plays. The first hour, maybe the first 2 hours. After that, like around 12 p.m. till 3 p.m., market usually gets flat. Not every day, but majority of the times, you'll see your chart looking like this, right? You'll see something like this until 12 p.m. and then after 12 p.m. you see a lot of chop. All the way till 3 p.m. sometimes 3:30 p.m. Now after 3 p.m. or after 3:30 p.m. there's something called power hour, right? I'm going to put PH. In power hour, volume starts kicking in again. A lot of times the volume during this time period is not real people trading from one another. It's not institutions. It's primarily market makers just exchanging shares, buying from the hitting the bid, hitting the ask, just constantly exchanging shares. That's why volume goes down drastically. So if you trade here, it's very easy for market makers to move the price up or down and shake you out or get you out of a position, which is why you also probably lose a lot of money here. So for the people that do give away profits, one thing I want you to check out, I want you to go back and I want you to look at this time period and I want you to look at where you're losing money, right? And you'll realize that you're making a lot of money the first hour, maybe first 2 hours, and then your P&L goes down, and this could be the other reason. Now, if that's the reason, obviously cut off your trading at a certain time, right? If you're losing money after 11 a.m. every single day, you're like, I make money until 11 a.m. and I stop making money and I start losing after 11 a.m. What do you think you should do? Simple. Don't trade after 11 a.m. Don't trade after 12 p.m. Cut it off. The next thing, I know I mentioned this a lot of times, the daily targets. I'm not a fan of having daily targets of how much to make, how much to lose. But once you get to a certain level, having this measuring stick is a little bit important, so you know where to stop, where to accelerate, where to take a step back, right? So for example, this all depends on your account size, how much you've been making, what your trading strategy is, right? Let's say you have a, I don't know, $20,000 account. Obviously, it also depends on what you're trading. You're trading options, you're trading stocks, you're scalping, you're day trading. How much risk are you putting out? All these things factor in. But let's say I have a $20,000 account, and my goal, and this goal should only come in once you understand once you have all the answers to all the questions I asked, such as what do I do when I make money? What do I do when I lose money? How do I feel when I make money for 5 consecutive days? How do I feel when I lose money for 5 consecutive days? How do I feel after taking a break? Like, these things you should have the answer to. Once you have the answer and once you get to a comfortable and confident stage, that's when you can kind of start implementing a number, saying, you know what, my daily target is maybe 500. My daily loss, my max loss amount is maybe, let's say, 200, right? Everyone's gonna have a different number based on account size, risk tolerance, and so on. But let's say my max loss is 200. Now, what this means is if I lose $200, I'm done for the day. If I make 500, right, I could also be done for the day, but this is where the tricky part happens, and this depends on you if it works for you or not. If you're someone that makes 500 and you can kind of cover this 500 up mentally and still trade the same way, cool, you're allowed to move forward. But if you're someone that trades and makes 500 and you notice that your mental mind completely shifts after making 500 or after hitting a daily target, you need to take a step back at that point. Because if you're hitting a daily target of 500 and the first thing you do is you start acting out where you're like, wow, I made 500 the first hour, the first 5 minutes, shit, let me accelerate. What tends to happen with these people is when they make this money, their mind, as I mentioned before, starts having a lot of mental blind spots, and those blind spots make it harder for you to see the downfall in the upcoming trades. So all you see afterwards are great trades. Like, wow, I made 500. I'm phenomenal. I'm great at trading. Everything I see onwards from here is great. So you don't see the downside of those trades, and then your account obviously starts going down. Now, if you're at a point where you have a daily goal of 500, you make 500, cool, phenomenal, and you're able to put it to the side, that's great. Then keep going. Because when you have days where the market is giving you opportunities, me personally, I don't think you should stop. Like me personally, if I trade tomorrow, and let's say tomorrow the market is very, very good and my daily target is 10,000, I don't personally have a daily target, but let's just say my daily target is 10,000, and I make 10,000 the first 5, 10, 15, 20 minutes, I'm not gonna stop because the market is still presenting opportunities. I have separated myself from that. When I first started, it was a complete different story. Now, the only limit I kind of have on myself is a daily loss limit, right? I know that if I enter a trade, like I keep my daily loss limit at 5 grand max. Like if I hit 5 grand loss, right, and I don't know what the loss, why the loss happened, and it was a massive loss, I need to get off, right? There's days like I've had days where I lost 15, maybe 10 grand, and they happened because of stupidity. They happened because I took on a major trade, I put on major risk, but I accepted that, hey, I know if I'm wrong on this trade, I'm gonna lose 15. I accepted that, I understood that. But now if I didn't understand that I was gonna lose 15, and I was planning on losing 5 and I lost 15, there's somewhat a mess up or a fuck up in between that. And you as a trader need to be able to identify that. Now, like I mentioned, me personally, once again, I don't like to set daily targets on profits. One thing I do like to have is a daily loss amount, which I keep at 5 grand, right? Now, setting that out, the second thing that should be established is market condition. Now, me personally, if I'm in front of my computer by 10:30 a.m. and I see that there's no plays or the market's choppy for the first hour, I personally like to get off. I'm off, I'm done, I'm not looking. That also, I think, mentally helps a lot. Second is, and the reason I established this, just to kind of give you guys the reason, is because I know I know personally, if I sit in front of a computer for 2 hours, 3 hours, just waiting for a play, I get very impatient, and I'm like, oh man, I'm just sitting here, and I get an itch to kind of execute a trade. I know that about myself. No one's perfect. Like I know that if I sit in front of a computer for 3 hours and I have not executed a trade, I itch to trade. So if within the first hour there's no trade, a lot of times I like to get off. Now, that's something, once again, I've learned after trading, after practicing, after applying real money. Now, when you guys do that, you guys are gonna learn different flaws you have as well. And understanding that, that's where the establishment of this kicks in. Now, going back to the losing money aspect is, like I said, if you are making money the first hour, 2 hours consistently, and you're losing money, you have to first understand where the problem and disconnect is, right? Is it because you're trading after a certain time? Is it because you're getting overconfident? Most of the time, I think everyone should have a daily cutoff time, especially if you are day trading, scalping. You should have a cutoff time, 11 a.m., 12 p.m., that after this time, I'm getting up. I'm not trading anymore. Once you have that set, you should also have a daily loss limit. And you should also have a limit where I can only take a certain size unless or until I see a better play, right? And the way, or what happens in this situation is, let's say someone is trading, on each trade, they're putting on $200 risk, and they're looking to make, let's say, 600. They take one trade, they make 600. They take on another trade, right? They're losing 200, they're looking to make 600, they make 600. So they take 2 trades, they're up 1,200. Now, where people mess up here is they're up 1,200 for the day. They automatically go, okay, I'm up 1,200 for the day. I've been risking 200. Damn, only if I risked more, I could have made 2,400. I could have made 3,800. I could have made 3,600. You start, your mind starts kicking in and it starts playing with you, and it starts telling you what if, should have, could have, whatever all that nonsense is. And these things start stepping in. Once these things start stepping in, you're like, okay, I need to stop being scared. I need to size up. So what do you think you do on the third trade? Third trade, like, you know what? I'm gonna size up and I'm gonna take on a big trade. So what people do is they say, you know what? I'm gonna risk 1,000 to maybe make 3,000. If I'm right, I'll be up $4,200 for the day. Wow, that's amazing. The most I've ever been on a day. Cool. I'm going to take this trade. Guess what happens? And I'm pretty sure a lot of people can attest to this because this has happened to a lot of people, and they brought this up to me. They take this trade. Since it's a lot of size, since the sized up, it's easier for you to get shaken out. It's easier for you to panic. So you kind of exit the trade. You lose money. Now what happens? You lose 1,000, maybe more. And for the day, you're maybe up only 200 or maybe even red, because when you should have cut it at 1,000, you didn't, because $1,000 is so massive to you. And that's another reason you're losing money. And you're losing money after you basically made money. Now, if that's happening, as I mentioned, it's a good and bad problem to have. It's a good problem to have because you are getting at a better trading level. It's a bad problem to have because this kind of mentally messes you up a lot, because it's very hard to see that you are up $1,200 at 10 a.m. and then when the day is done, you're down 200. So psychologically, I know it affects you a lot too as a human, where you're like, wow, I had $1,200 more in my account. Now I don't have the 1,200 and I'm down 200, which, you know, ultimately affects a lot of your upcoming trades. So understanding this, establishing this is very important. You know, once again, guys, track your trades. Go back to each one of your trades, understand the problem, and once you understand the problem, you have to dissect into it and take it one step at a time. Now, if someone has like an exact thing that's been happening, bring it up in the upcoming webinars. Like I've said plenty of times, if you have like an exact thing, like, hey, I traded Roku for the past 5 days from this time to that time, like something more in depth, let me know in the question box. I will go more in depth and kind of construct a better presentation where I can kind of take somebody and break everything down with them. All right, so I'm gonna go over some questions. So whatever questions you guys post, once again, no one can see the name. Just post the questions and I will paste them right here. So this is the first question that I have, right? Now, the first question I have right here is, whenever you have a moment, can you talk about scalping and the mental state one has to be in with regards to speed and making fast choices, on how indecisions and scalping are very detrimental. Now, what you guys have to understand is scalping. I know a lot of people hear the word scalping or hear the word day trading, and it sounds very cool and very attractive. Wow, I get in a trade and I get out 2 minutes later, right? That sounds very, very good. I know, I understand. You get in and 2 minutes later you're out and you made 1 grand, you made 2 grand, phenomenal. Now, what everyone does not see is the back end. There's a huge back end concept to this that you have to fully understand. There's a lot of shit that goes on in the back end for people to execute a trade in 2 minutes, on 20 seconds, 30 seconds. When you're scalping, especially when you're scalping options, there's a lot of risk, right? So there's some things that you have to be good at. You have to be very, very quick on your feet, like very, very quick. If you're not quick on your feet, you're gonna have a very hard time, right? That's one issue a lot of people have. They trade and they're super slow. Now, when I say quick on your feet, I don't mean like running wise. I just mean you have to be able to process things at a very high pace. If you're unable to process things at a very high pace, you're gonna have a hard time. That's the first thing. Second thing, right? Your process level has to be high. Now, this is not gonna happen overnight, which I'll break down. Your process on processing information and executing has to be at a very, very high level. Like, you have to be able to see things, process, execute. There can't be any hesitation. What happens to a lot of people when they're trying to scalp is they process the information, they think, and then the trade is gone. People that are scalping, you process, you eliminate this thinking part, and you execute like right away. There's no thinking of like, should I do it, should I not do it? It's, wow, I see the play, execute, buy, sell, whatever. It has to be super quick. If you guys go on my YouTube, I have some videos of me live trading some plays. I'm gonna upload a few more, and even if you guys go through the course, at the end and extra videos, I have a few live trading videos where I'm scalping options, 30 seconds, 1 minute, 2 minutes, and you'll see in a lot of them, it's just quickly, no thinking, enter, exit, and that's where you have to get yourself to. Second, you need to have extreme discipline. Like, I think the word discipline gets used a lot, and a lot of people tend to ignore it because you hear it a lot. It's like anything else. When you hear something a lot, your mind starts blocking it out, right? So I think a lot of people use this word and throw it out like discipline. So I think when we as traders kind of hear it, our mind blocks it out. Discipline is one of the most important things in trading. Now, where does discipline kick in? Now, if I'm scalping or I'm day trading something at a very fast pace, my discipline is going to kick in on me exiting when I said I'm going to exit. Hey, I'm going to exit at 1504, right? I'm exiting. There's no thinking, there's no my mind kicking in and saying, oh, maybe I should, maybe I shouldn't. No, I said 1504, everything looks good. My processing speed on understanding everything and my discipline and execution is at a high, so I'll be able to get in and out. If you don't have discipline, every time the trade goes against you or even in your favor, you're not going to execute. Like you get into a scalp and in 2 minutes you're up like 1500, right? Or you're up 150 or whatever the case is. Now, if you don't have discipline on following your plan, you'll say, I'm up 1500, let me wait a little bit more. And a lot of times, if the play goes against you, you gave up your profit. So that discipline aspect has to be changed. Next, and the last thing that is needed is you need to be very, very, very good at processing orders. You need to be very good at executing. Like your execution has to be phenomenal. Like when you're trading options, right, especially options, you need to understand there's a huge spread between the bid and ask. You need to be like so good at knowing enter, exit, enter, exit. That's with options. Even when you're trading stocks, your order execution has to be top notch. You need to know where am I entering, where am I exiting. Your order has to be ready. There can't be a time where a stock is, let's say, breaking out and you're going and setting up your order. No, your order should be ready to go. Like all you should have to do at this point is click a button. You should not be going to set up your order. Once you start going to set up your order, that's going to delay the process. And this is something, guys, it takes time. Like it takes time because there's muscle memory, there's confidence, all these things. When you guys first try to scalp or first try to trade at a very high paced environment, it's hard. Like it just like accept that it's hard, right? Because your mind at this point is going to think about 10, 20, 30 million different things. Oh, what if it goes against me? What if I can't get in? What if this? What if that? Blah, blah, blah. All these things just start shooting in your head. As they start shooting in your head, the play is sometimes gone. And when the play is gone, the first candle, second candle, what majority of people do is, all right, let me get in now. And now it's too late, right? So that's also where the discipline kicks in. So if you are not able to process things at a very, very high level, right? It's not possible for you to scalp. Discipline plays in every role of trading, your swing trading, day trading, whatever. Discipline plays a huge role, but especially if you're scalping, you need to make sure that you can actually process information at a very, very fast level. So that's super important. So this is something, once again, if you understand that you can process things at a super fast level, work on it and build on it. All right, next question. All right, right here. Hi, Umar, I'm scalping options. I think I'm rushing into too many plays before real confirmation. What can you say about patience and waiting? I feel I have to catch the breakout before it happens and it messes up on me sometimes. I am fast executing. I just sometimes do it before the play confirms. So you're chasing. So you're basically chasing. Okay. Now, if you have a play, do this. So if you took on a play, if you scalp the option play, tell me the time, right? Tell me the time you entered, why you entered, and the price and everything. Just give me that on a recent play, and I'll break this down because I think this question has a lot of meaning behind it, especially if we can see the play. So write down what stock it was, the time, to enter the date, just so I can open up the chart and kind of look at it and kind of walk through what happened on that concept. Okay, so I'm gonna come back to you after a few questions. Next, best way to deal with emotions in trading does not matter if it's profit or loss. It's just best practice to deal with emotions in trading. One thing to kind of work on emotions, what I bring up a lot, is meditation. I think meditation is a huge benefit, not just to trading, but to your personal life. That's number one. Second, I think your mindset on accepting a lot of things with trading, right? I think this is what destroys a lot of people. They don't really accept a lot of things that come with trading, right? Now, what do I mean by a lot of things that come with trading? Now, there's a lot of things that come with trading, such as you can be up $1,000 on Monday at 10 a.m. and then by 11 a.m., because you took on a bad trade, you're negative 200 for the day. This already throws up emotions in a crazy way. That's number one. Number two is you're up 1,500 for the day, you take on a bad trade, and you're only up 1,200. We as humans are still not happy because you saw 1,200. Third is you're up 1,500 for the day, and you're like, shit, I sold too early. I didn't size up. I could have made 3,500. So if you look at each concept, we as humans are never ever happy on any outcome, right? In the first outcome, we lost money. We didn't want to lose money. We say only if we were green, we would have been happy. Second outcome, we could have made 1,500. We only made 12. Third outcome, we made 1,500, but we should have exited later. We should have held. We could have made more. So many things. So the mindset aspect is accepting all of these unknowns. Once you accept all of these unknowns with trading, right, it just kind of becomes a lot easier. Like me personally, like there's days like even my Roku trade a few days ago, like I know if I held my Roku trade for legitimately 5 more minutes, I could have made 2x more than what I originally did. Like I completely understood that. Now, if I took that same mindset back to the original time I was trading, maybe 3, 4, 5 years ago when I first started, and even my first 2 years, that would have upset me. I would have said, oh man, you know, I made money, like I did very well in the trade, but only if I held 15 more minutes, only if I had 5 more minutes, I could have made this much, I could have made that much. And that mindset of accepting just this one simple thing, the moment you hit buy or the moment you hit sell, you leave everything out on the table. That's it. Like if I take on a trade tomorrow and I hit buy and then I hit sell, there's no going back. There's no what if. Like that word what if is like a destroyer in trading. Like it will destroy you on such a crazy mental level. Like what if I held longer? What if I didn't hold longer? What if I got out when I was up 1,500? Like it's a never-ending cycle because we as traders, we as humans are never going to be happy unless we buy a stock at the bottom and sell at the top. Like, you know, and there's days, very minimal days where you'll buy a stock here, you sell here, and it starts selling off, and you're like, wow, I'm so good. That's not going to happen every day. That's when we're the happiest. But if we buy here and we sell there, and the stock ends up going higher, it's gone. We're like, shit, why'd I sell? So it's that mindset aspect of accepting the unknown. Like you're walking into the unknown. You're walking into it where any of these situations can happen, and you need to understand that this is part of trading. Yes, you should go back to your trades and review what you could have done better, but you shouldn't beat yourself up mentally and destroy yourself and like, oh my God, you know, I could have made more, I could have made less, like blah blah blah, all these things. Accept it. Like there's no what if. Like this word, delete it from your dictionary. Like it should not exist when you're trading. Like you need to really eliminate the word what if. It's a very, 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 very bad word in trading. This word is just gonna mentally drive you insane. Like it used to drive me insane when I, you know, initially started trading, and then every time I would look at a trade, I would say, what if this? What if that? What if I held? What if I did this? And it would just completely like mess with me on such an extreme level. So eliminate that word, and I think just eliminating that word, meditating and understanding you're walking into the unknown is just gonna make things a lot easier, even when you make money or even obviously when you lose money. All right. All right, interesting question. I like this next question. Hey, whenever I reach a whole 1,000 on my account, I always end in a red day. I am fluctuating at the whole 1,000 number, go above it and then back below. What steps can I take to overcome this? The answer is very simple, right? So the answer to these questions are very simple, but they're very hard to implement. So basically, the person is having a hard time whenever the account makes a profit of maybe $1,000. And the reason for that is because you've never maybe mentally been above $1,000 and you maybe been on a roadblock above that. So what happens is psychologically, what you're doing, it's very evident, is you're looking at your P&L. So you're not trading based off the chart. As much as you may say, I'm trading off the chart, you're not. You're trading off your P&L. Since you're trading off your P&L, you're looking at this number. And the moment this number pops up, it's kind of like a sign. And that sign kind of blinds your brain. Your brain gets blinded by this number because now either you get super excited, you get super nervous, you're like, oh my God, I'm up $1,000. It's the same concept of every time in trading when we reach higher and higher numbers and higher levels, these numbers mess with us, right? So even personally with me, when I brought my account originally to $100,000 when I first started trading, I had a huge drawdown. Like when I first got my account to $100,000 after 2.5 years, my account took a 30% drawdown. I went to 70K in like 2 weeks. My account went down 30% in 2 weeks, which is huge. Now the reason it happened is because when I got up to 100,000, when I saw 6 figures in my trading account, immediately that just shifted everything for me. I was like, holy shit, I'm at 100,000. Oh my God, my position sizing increased. Everything, like the way I was trading from here till here shifted because I saw this number. So what you're doing is you're seeing this new number, even a profit target, and it's completely throwing you off, right? And that's where the P&L aspect kicks in. You can't look at your P&L. And even with me, sometimes there's, like I said, as traders, no matter where you are in your trading career, you're never going to be perfect. Even me, when I sometimes see my P&L on some trades, which is why I hate looking at it, if I size up on a trade and I'm up 10, 20, 30 grand, especially if it's in like 20 minutes, a lot of times it's hard for me to like not get out, right? Or be like, oh man, I should hold. It's kind of like, oh shit, I'm up X amount, get out. So it comes down to, just don't look at the P&L, ignore it, ignore your P&L completely. Don't even try to do the numbers in your head. We as humans go, oh, I have 10 contracts or I have 100 shares. I know I'm up at $100. I know I'm up 1,000. No, look at the chart. Say, should I sell? Should I buy? And one great thing to do, one great thing to implement into your trading, guys, is when you're trading and if you're by yourself, put on headphones and talk to yourself legitimately. I know it sounds crazy and it sounds like, whoa, talk to myself. Just talk to yourself legitimately. Like I'm not even playing around. Like look at the chart and talk to yourself. Obviously, don't do this if you're in a public environment, like if you're at a library or Starbucks, you're gonna look crazy talking to yourself. But if you're at home or if you're at an office, you're looking at a stock, talk to yourself in a sense where you're like, Apple is making a new high. The level 2 looks good. Buyers are kicking in. Volume looks strong. Okay, I see a red candle. There's 20 seconds to go until the red candle closes. I have time. Don't panic. There's no need to panic. Now, when you talk to yourself in that certain time, what happens is you are kind of moving away from your brain and thinking about money or the position. Now, your focus kind of goes on the chart. And once you put your focus on the chart, you start looking at the chart overall, you start missing out on like, wow, I'm down $800 or I'm up $800. You're like, no, I'm looking at the trade. And then when you start talking to yourself, you don't give your mind that peace or quiet where when you're quiet, right? And I'm pretty sure you guys have noticed this. When you're quiet, your mind thinks of a million different things. Oh, I can't lose $1,000. Oh, I'm up $1,000. Oh, what if it does this? What if like, but when you talk to yourself in the trade, you're not giving your mind to kind of have those thoughts, which is a huge, huge benefit. But yeah, this is happening because you're looking at your P&L. Just trade the same way you're trading. Like I've seen you post some of your trades. You've been doing very, very well. You've had 300 days, 400 days, 700 days, 600 days consistently, which is great. And then the moment that $1,000 barrier comes, you start messing up. So ignore the P&L. Keep trading the way you're trading because, like I said, the stuff you're posting is phenomenal. All right. Okay, I was watching. Where is this? Edwin. Okay. All right, next question. I was watching Disney Monday for an entry on the put side. My entry was off from where pre-market was. I was scanning through the 20-day 1 hour when I did my plan for Disney puts. Entry 150, target 149, stop 150.6. Even though the market was very bearish, my Diz entry was still there, but the fact that Disney was overextended, I choked up and watched it run even lower. Any advice on how you would have approached that would be helpful. I didn't know how to adjust. Okay, also a pretty solid question. Let me look at Disney. Let me open that up, and let's kind of break that down. There's a huge mindset aspect that I'm pretty sure people that are starting out are going to see a lot too. So Monday was what? It was the 3rd, right? Yeah, Monday was the 3rd. Okay. So the 5th. No, Monday was the 2nd. Okay. Now let's look at Disney for a second. Let me just go back to the question. So you were watching Disney on Monday for an entry on the put side, okay? My entry was off from where pre-market was. I was scanning through the 20-day 1 hour when I did my plan to Disney puts. Entry was at 150. Okay, let's check this out. Their entry was at 150. So you wanted to enter your puts at 150. Okay, very, very, very low, but still pretty solid entry. Okay, 150. That's number one. So your entry was 150, target was 149, so your target was kind of hit, okay? Even though the market was very bearish, okay, so the market was bearish too. My Disney entry was still there, but the fact that Disney was overextended, I choked up and watched it run even lower. Okay, I see what the issue is here. So basically, you had Disney on your watch list, and this I'm pretty confident has happened to so many people. Pretty common mistake. So imagine having a stock on your watch list. Okay, you have this stock on your watch list. You create a setup that, hey, if it gets here, I'm gonna do X, Y, and Z. And the stock kind of does almost exactly that. And then you're sitting here and you're like, fuck, why did I not trade, right? So that's the issue here. Now, great analysis, great trade, great everything. Now, it's not overextended. That's what I think you're kind of missing. So you're missing some parts on price action, and I think that's what's kind of throwing you off. I'm not gonna go to the bigger chart right now. I'm just gonna look at the current levels, right? I'm gonna break all of this down, and we're gonna start from here. So we look at Disney, we're on a 5-minute chart. Disney opens, gets rejected, starts going down. Now, this right off the bat, guys, what you have to understand is the overextended part when you guys are trading some stocks kicks in because it throws you off because you're like, oh man, it fell way below. But when you took this trade, you already knew where your entry and exit was, right? So you didn't follow that. The reason you didn't follow it is because you didn't factor in everything beforehand. So it's kind of like me saying a stock is at $140, right? I want to buy it when it gets to 149. When the stock does get to 149 that day, or if it does, now is when my brain wakes up and says, wait, stock already made a 9-point move. It's overextended. Now, that's because your brain is just waking up, and that's because when you did your analysis, you didn't factor that part in. You didn't factor, cool, I want to buy puts when it breaks 150, but if it goes to 150, it needs to make a 3-point move down. How am I going to feel about that 3-point move? Now you know how you're going to feel. So next time you do your analysis, great, now you know what to implement. That's number one. Number two is, yes, I would say it's overextended if it went all the way down to 150. Now, that's not what happened here. If you look at the price action, you can see stock goes down over and over and over again. Look at what happens around the 150 level, 150 level. Buyers keep stepping in, step in, step in, step in, right? There's some sort of interest. Now, if you keep progressing, you can see bears step in, push it down, and bears are in control. Now, if you look right here, right, simple price action, right? Nothing too complicated. Obviously, we're looking back. It's easy to look back at a stock and make a play, but I think this is pretty straightforward. Stock pushes down, buyers step in, they're holding it, bears push it lower, bears write it down another 2-3 points. Now, if you look here around this area, the 149.80, what do you see? Around the 149.80, not the 150, because you established 150. Now, this is another problem. People establish 150, and I mentioned this a million times, never have round numbers. Never say, oh, if a stock breaks 150, I'm going to enter. No, I want to see it break like 150.2, 150.4. I want to see it kind of get away from 150. Because think about it, everyone else is entering around 150. And then that's where the fake outs happen. So now you start seeing, where's the stock bottoming out? It's bottoming out at 149.8 around. Now, if it starts reversing, cool, I'm not really gonna buy puts. Once again, for anyone that doesn't know what puts are, when you trade option puts, you're kind of anticipating that the stock's price will go down. That's where you make money when you trade puts. That's number one. Number two is, let me just open this up for a second. Number two is when you guys are taking these trades, you shouldn't have your round numbers. The round numbers you have completely throw you off. Now, the third thing is you can see that it's flattening out, it's holding up strong. As it's flattening out and holding up strong, what happens right here? Look at that. Now, if you look at this on a 1-minute chart that day, you could have gotten one good entry somewhere around here, and you can see it does the same thing again, makes a move down, consolidates. Now, if you look at this move and that move based off simple price action, it's the same thing. This, what's happening here, could have happened there. Instead, it dumped lower. So if you look at the simple price action concept, move down, consolidation, move down, consolidation, move down, consolidation, but now it's trying to reverse. So your entry, especially if you're trading options, you had a good solid 60 cent, 50 cent move right there. And I think on option trading, especially if you're playing weekly expiration, there was some money to be made there. You just didn't execute because you're looking too much at this, and that's kind of throwing you off and scaring you. But you have to understand, there's a complete difference of something being overextended if it looked like that. See, if Disney looked like this, I wouldn't touch it. I wouldn't touch it at this point. But Disney didn't look like that. It took the breaks, it took the break, and then it dumped, right? So based off that, I think that was a pretty good trade right there. You just didn't execute because your brain stepped in the way when it was time to take the trade, and it said, no, you shouldn't. What if it goes against you? All right, so next question. A lot of good questions here today. All right, hi Omar, thank you for your time. I'm constantly green and being patient the last 2 months. Had a bad week, but I recovered from that and I feel pretty confident in myself and my strategy. The only problem is the profits are not covering my monthly expenses and I do feel pressure and I have to size up, and I tried and I screw up. So I went back to smaller size and I'm doing good again, and I'm doing this full time. I don't have any job. Any advice? Wow, phenomenal question. Yeah, now, let me get my pen. Very great question, and I think this question is gonna benefit a lot of people. You shouldn't, now see the problem with trading, and a lot of people, there's a lot of traders I know that are phenomenal traders, but their problem is legitimately money. Now, what do I mean by that? Is either they have to pick between a job or trading, and balancing both out is in a way doable, but obviously just strictly trading makes life a lot easier. Now, what you guys have to understand is if you're someone that is trading on a monthly basis and you have certain expenses that need to be met, that's a lot of fucking pressure, like a lot. I don't think that's how your trading should be approached. I think the way trading should be approached is you should have, number one, a safety net for maybe the next 6 to 8 months. So for you to be comfortable in this stage, you need to have expenses set aside. Like you need to have another account. Let's just say, for argument's sake, your monthly expenses, I don't know, are $3 grand, right? Now, if they're $3 grand, based on the next few months, you should have maybe, I don't know, 20, 25K just sitting in one account, right? This should just be the expense account where you're like, you know what, I have money sitting aside for the next 6 to 8 months. I'd still recommend a year, but 6 to 8 months is pretty cool. That's if you have no other income coming in, you have no cash flow, you have no job, nothing. You need to have a safety net. Now, if you don't have the safety net, you're legitimately setting yourself up for failure. Like you're putting yourself up for failure. I'm sorry, it's very hard to kind of, especially if it's your first year or even second year. I think it's very hard to kind of maintain that. Now, this is the first thing that needs to be done. If this is not done, your trading account is going to take a major hit. Now, the reason for that is because now every month, let's say for argument's sake, it's $3,000. Let's say your monthly expenses are $3,000. I don't know what it is, but just using a random number. If it's $3 grand, your pressure every single month is that I need to basically make $3 grand. So let's just speak this into existence. Let's just speak about what can happen in the whole month of October. Let's say you're trading October. First 2 months, first 2 weeks you trade, you're negative, I don't know, negative 1,200. Now you look at your P&L mid-October, you're like, fuck, I'm negative 1,200. Wow. Now, when the Monday kicks in, the pressure is even higher, not because you're negative 1,200, because you need to make $3 grand. Now, not only do you need to make $3 grand, you need to recover 1,200. So now what you're doing is you're going into the marketplace and you're setting the profits you are anticipating, which never really works out. Like I can't sit here and say, in December, I'm gonna make 10 grand. In December, I'm gonna make 10 million. Like I don't know what December is gonna present. I can't sit here and say in January, I'm gonna have the biggest month. January, I might have the worst month. I might have a flat month. I might have the best month. I don't know. How am I going to know is when the month comes, when I trade, and all the factors kind of align. Now, what happens here is you're kind of going to say, shit, I'm down 1,200. I need to make 3 grand. So now you start over trading. Now, obviously, trading is not something where if you push on it harder and you're more aggressive and you quote unquote work harder and you put in more screen time, you don't make money. Like there's people that can put in hours and hours of screen time and still don't make money. So you start being more aggressive, you start sizing up, you start doing things out of the ordinary because you're like, yeah, hey, for me to make my money back, I need to size up, I need to be more aggressive, I need to take on more trades. So instead of you making 1,200, majority of the time, I'd say at least 95% of the time, you actually end up losing more money. You end up losing more money over and over again. After you start losing more money, now you have 3 days until October, you're down 5,000. Now you're not yourself at all. Now you're somebody completely different. And you say, you know what? Fuck. I'm gonna take this big trade. It's gonna work. And you just dig yourself a deeper hole. And all that's happening because you're pressured, and this pressure should not exist. Like you should not put yourself in that trading pressure where you're required to make a certain amount every month. That's not a good approach. Now, obviously, once you get to a great trading level and you have a cushion, like this cushion is very important. Like for you to start off zero every month and say, I gotta make 10 grand every month to pay off my expenses, or 5 grand or 2 grand, whatever, and you start zero every single month, that's too much pressure. As a trader, that's gonna kind of destroy you. But if you have a cushion for, let's say, even a year, right? Now you know that if you don't make money 1 month or even 2 months, that you still have money to cover those months, and that still keeps you at an elevated level. So this cushion is very much needed. If you don't have a cushion, you're gonna need to go get a job, kind of support that concept of building a cushion before you trade. Because if you're just trading without a job, without any money coming in, and you have expenses, that's a legit way of you setting yourself up for failure. All right, next question. It feels like I am losing money in real trading. I see a red candle and I exit. It's like I was making more money in paper account, which I know makes no sense, but it's like I see a trade, I get in, and when I see I'm losing, I exit. First and foremost, paper trading. If you are paper trading and real money is never the same. In paper trading, there's no market makers. You get executed and filled on every order. On real trading, you don't. Like on real trading, you do not get executed and filled on every order. Like you're actually buying from real people. You're actually buying and selling from traders and market makers. So there's harder to kind of get shares, right? Also in real trading, you have a lot more emotion. Paper trading, you don't really give a shit. That's the reality of it. Because if you make money, woohoo, I made money. If you lose money, you're like, oh, all right, whatever, it's fine, right? So let's eliminate that for a second. Now, you're losing money because you're seeing red. You're seeing a red candle. Like that's not good. That's not like a way to trade. Your way to trade should be, and I'm pretty sure based on your question, you don't have this outlined. When you take on a trade, right, you should have these 3 components outlined. Where are you buying? I'm buying a stock at 10. Where are you looking to sell? Where is your potential stop loss, right? If this doesn't exist, all right, cool, whatever, you can still live. But these 2 need to be existed. I'm buying the stock at 10, I'm exiting at 950. So if it goes to 950, I'm out. Now, the reason that's super important is because let's say tomorrow I buy a stock at $10. And let's say my stop loss or my exit point of where I'm gonna exit is 950, right? Now, watch this right here. Now, if tomorrow I buy it at 10, stock goes from 10 to 1020, and then it starts selling off. I see one big red candle, and let's say I see another big red candle, and the stock is at, let's say, 970. Me, I'm not panicking because I already accepted the 950. I already accepted that value, right? I already accepted this dollar figure that if it goes to 950, I lose 50 cents. If it goes to 950, I lose 500. If it goes to 950, I lose 250. If it goes to 950, I lose 5 grand. Whatever the number is, I already mentally accepted that. So this noise here is not affecting me. It's not bothering me because I don't care. I know where my exit point is going to be, and I know why. Now, the only reason this would bother me if I see red and I panic, and if you are panicking, is because you don't have a plan. You're entering a trade and you're like, shit. Now, sometimes, let's just say, hypothetically speaking, you do have a plan. You do want to exit at 950, and the moment you see red, you panic. That's just emotional trading. You're maybe trading with too much money. that's probably messing you up emotionally, or your emotions are out of whack. If your emotions are out of whack, that's something that really needs to be worked on. You really need to take a step back, because if you see a red candle or whatever candle and you panic or react off that, that's not a good approach to trading. You need to have a plan, follow that plan, and obviously accept it. You have to say, well, if it goes to 950, I'm wrong, I exit, I accept it, I'm going to lose X amount of money, and take it from there. If not, you have no plan. And if you have no plan, you're just setting yourself up to kind of lose money in the market. All right, another good question. What would you suggest for a trader that knows their flaws but continues to make the same mistakes? For example, is jumping in a trade before confirmation and loses money. Trader tells themselves that I'll never do that again. 2 weeks later, the cycle repeats itself. Oh, that's an obvious cycle. I mean, you're not the only one. I think everyone does that. Even me, like there's times like I said I wouldn't do this and I would do it, but it wouldn't happen in a 2-week time period. It would kind of happen maybe in like a few months, right? So it's like, even with myself, like I do something today and I'm like, fuck, why'd I do it? I'm an idiot. Shit. 3 months later, I'll maybe do it again. That's fine, as long as there's a huge gap. Like obviously we're humans, we're gonna make mistakes, but 2 weeks, now that's an issue. Now if you're doing it 2 weeks later, that's a major issue. Now, if that's happening with anyone, there's something called neuroplasticity, right? Let me see if I can find it. I probably have something. You guys can look it up. It's called let me see, there's something called neuroplasticity, and I think understanding it and learning it about it is very important. Let me break this down. This is what it is, and I think everyone should look into it. It's very important right here. So once again, it's something called neuroplasticity. It's basically reshapes the way your brain operates, your neurons and so on, how you operate, how you function, right? So if you're making the same mistake over and over again, and it's a mental mistake, it's a psychology mistake, where you know you shouldn't be doing this and you're doing it, it's because you need to rewire your brain and your operations. It goes back to the same thing of, if you're not disciplined, you might be disciplined for 2 days, and then the third day you're like, I don't give a shit. It's because these neurons are not wired the way they should be, right? So for you to get to a higher level, and it doesn't just apply with trading, it applies with everything else, you need to rewire your brain. So neuroplasticity, if you guys look into it, it'll show you everything about that. You can legitimately rewire the way you operate, the way you're structured. This takes a lot of time. It's not going to happen overnight. It's with the repetition of building habits, building a system, right? So now in trading, let's say you have a problem like this where you're making the same mistakes. You need to create a system, right? Just telling yourself something as simple as I'm not going to do it again is not going to work. We're humans. We don't operate like that. So if you make this mistake and you tell yourself tomorrow, oh, I'm not going to do it again, you're saying that at that moment and your confidence is super high, is because you've lost money and you're upset, and all these things are making you have that ultimate confidence and reassurance that you won't do it again. But what you need to have, and a little bit of neuroplasticity kicks in, or restructuring of your brain kicks in as well, is you need to have a system. Okay, next time something like this happens, what is your system? What are you going to do? What is your routine? What is your guideline? Okay, so next time I see a trade that isn't giving me a confirmation and I feel like I'm gonna get in, just fucking close your computer and walk away. If that's what you need to do, close your computer and walk away, right? Yes, you'll maybe miss the trade, but you're also gonna build yourself to a point where you're like, shit, if I react off this, I'm gonna have to walk away, right? And that's something where also, like I mentioned, the aspect of discipline kicks in too, because now discipline is kicking in and showcasing you that, hey, I need to get up and I need to leave. So you need to have a system where, okay, I didn't see my confirmations. Why did I get in? I got in because I got super happy. I got super ecstatic. I thought the stock was going to go up. I started counting how much money I'm already going to make without the stock even showcasing me a play. These things need to be avoided. Now my system requires me to actually wait for the confirmation. What confirmation do I need to see? I need to see it break this level with strong volume and strong buying pressure. If I see it, I have to immediately execute. Now, while you're in the process of doing that, very important, your size, right? Your trading size has to be decreased. If your trading size is not decreased, you're gonna have a hard time, right? And that's maybe another reason why you're having a hard time on not listening to your same mistake. It may not be just as simple as you're doing it again and it's 2 weeks. It may be something where you probably had a bad trading week, right? And then you saw something similar and you're trying to make your money back. So look into it a little bit more and check it out, and you're probably going to see that there's other factors underneath that concept of you not listening to yourself. It's maybe because you lost money for a week straight. It's maybe because when you're trading, you're trading on 1 hour worth of sleep. Now, if you're not sleeping enough, your willpower, your focus, your discipline, everything goes down. So it's very easy for you not to listen to yourself. So these are the things that have to be tracked. And as you guys, people that probably haven't traded yet, or people that are progressing and watching this webinar, this is a clear indication that shows you your mental health, your physical health are extremely important when you guys are trading, because if they're not at a top level, you're not going to be able to execute. You're not going to be able to control your mind. You're not going to be able to have discipline. You're not going to be able to have willpower. And all of these things play a huge role, because once again, if you sleep 1 hour a night or 2 hours a night, or you're not getting adequate amount of sleep, these things are all going to lack, right? And them lacking and them not being at their optimal level are going to make you make stupid mistakes, and those stupid mistakes are going to make you lose money, and that's just going to be a downward spiral. All right, next question. Wow, all caps. Is it possible to have discipline on profit taking, but no discipline at risk management? It seems like I'm not okay with being right, but not okay with being wrong. Discipline is discipline, right? Simple as that. You can't pick and choose what you have discipline with and what you don't, right? For example, one person might be very disciplined with the gym, or say they're very disciplined with the gym, but they might suck when it comes to work. They might seem like they're disciplined with the gym because they enjoy the gym. Discipline is basically when you have to do something that you don't want to do. You may want to go to the gym, so that's why you're like, I have discipline because I go to the gym. No, that's not what discipline is. Discipline is me telling you, hey, like, do this assignment that requires 5 hours of you doing something you don't want to do, and then discipline kicks in and it's like, okay, I got to do this shit, fine. So at this point, no, you don't have any discipline. Like, it's simple. There's no discipline. That's number one, right? Discipline is not there. You can't pick and choose on what you're gonna have discipline with and what you're not gonna have discipline with, right? Second, so you have discipline with profit taking, but no discipline with risk management. Okay, the thing is, it's easy to take profits because when we humans see a little bit green, and we don't see it often, especially in trading, it's very easy to take it off the table, right? So I might see green. Let's say I'm trading, and for the past 10 days, I've been green 2 days, right? Now, since I've been green only 2 days, whenever I see green, I'm going to take it off the table because mentally I'm like, oh, I don't see green a lot. I see it now, take it. You're confusing that with discipline. That's not discipline, right? That's just your mind is not used to seeing green days. So when you see it, you take it off. Now, your mind's used to seeing a lot of red days, so you kind of became numb to it. Since you became numb to it, you're kind of putting the word discipline with it and saying, oh, I'm not disciplined with this, but I'm disciplined with that. No, you're kind of numb to red days, and you being numb to red days makes it kind of easier in a way for you to hold through them because you've seen it so much. And when you do see them, you're like, whatever, I'm gonna leave it. I'm not gonna exit. I'm gonna ride out the trade. Now, there's a lot of reasons behind that, right? Reason you're not okay with being wrong, right? And this is the reason I had too when I started trading. I hated the idea of being wrong. I was like, oh, I hate being wrong. But you gotta understand, like, to be a good trader, you gotta accept that. Like, you have to, like, legitimately sit down and accept that I'm gonna be wrong. The whole idea of trading is to be wrong, so when you're right, you can actually make the most amount of money, and when you're wrong, you lose a little bit of money. Your idea is to kind of go out in the battlefield, kind of risk certain trades, so you can find the high probability trades. You're not gonna just wake up and out of 5 trades, you're not gonna find all 5 high probability great trades. That's not realistic. But what you can do is you can say, you know what? I wrote 5. You know what you can do? You can say, you know what? I don't know which one's actually gonna work or make the most sense, but what I can do is I can risk $1 on all of them, right? And I can look to make, I don't know, 2 2, 3. This one you might make 2. This one you might make 4. This one you might make 1. This one you might make 7. This one you might make 1, right? Or let's just say on a few of them, you do lose money. You lose money, and let's just say you lose money. These 2 you made money on, you made 11, you lost 3. Do I care about being wrong? No, I don't give a shit about being wrong. I made money at the end of the day. My risk to reward ratio was good. My risk management was good. I was finding high probability trades. So when I'm wrong, cool, I'm wrong. Move the hell on. That needs to be accepted. But going to discipline, I think with just this, I don't think you have any discipline, to be very honest with you. I think if you can't cut your losses and you have a hard time with being wrong, you don't have, you know, any aspect of risk management, your discipline is not there yet. Size down, trade small, work on building a discipline, and take it from there. All right. Okay, I have been on green days for the last 5 days. Today I lost 500 because I became greedy to get more money. Basis on my account size, I was aiming high. How to make myself mentally calm and satisfied about consistent profit rather than having big profit? I mean, at the end of the day, we're humans, and I tell people when you start trading and you make money, or even when you don't make money, you start realizing how greedy you are. So welcome to the club of realizing how greedy you are. That's number one. Number two is you've been on a green day for the past 5 days. A lot of people go through this cycle too. I've been through it. I was on a green day. I've had consecutive green days for I think 2 months straight, probably in the summer of I'd say 2017 or 2018. I've had 2 months of consistent green days, and then I've had a red week where I gave up more than half of my green day profits, right? So it's pretty normal for this because at this stage, your confidence, everything is like super high, right? Now, as all of that is super high, that starts kind of messing with you, and then the way it starts messing with you is when you start seeing these green days for consecutive periods of time, you start taking a step back, and you're like, wow, I made money the past 5 days. I can make more if I size up. So you start messing up the way you're trading. You start taking up too much size, or B, you start changing the way you're trading, or C, your confidence goes up so high that you start missing the bad things on trades, right? Now, if you go through this again, like right now, what I think you should do, I think since you lost 500 and your emotions are like making money 5 days and then losing money, I think you should take like 2 days off or the next 3 days off. I think maybe if this happened today, I think you should not trade tomorrow because your mind's kind of everywhere. Take tomorrow off, take Saturday off, and don't even look at a chart. Like, I mean, like disconnect on another level. And I think a lot of people lack that, but disconnect, like completely disconnect. Don't even think about trading. Like, don't even say, I need to look at a chart. Let me look at news. Disconnect. Like, you don't know anything about trading. Just walk away. Come back Sunday, relook at your trades, come back with a new approach. That's number one. Number two, you have to understand if you want more money or if you want to potentially make more money, you need to risk more money as well. Meaning, if you're not okay with losing, let's say you want to make 2 grand on a trade. Let's say the most you made on a trade right now is, I don't know, 800. If you made 800, that's the most you made on the trade. You can't say you want to make 2 grand without increasing your risk. Let's say your risk on the 800 trade is 400. You're risking 400 to potentially make 800. Here, this also has to go up. This maybe has to go up maybe to $1,000 if you look at the same ratio. This is a 2-to-1 ratio, 2-to-1 ratio. Question is, if you lost $1,000, how would you feel? Most of the time, not good. So don't focus on that. Focus on this. I'm okay with losing $50. I'm okay with losing $100, and slowly climb up the staircase. Don't try to do it overnight. Where overnight you're like, oh, I'm gonna try to make X amount of money. This factor has to go up, and a lot of times when people increase this factor, their trading takes a hit. All right. Hey, Umar, I feel concentration is not the same every day. There are days I have a hard time concentrating fully on my trades or your online course without having personal problems or other responsibilities in the back of my head. How can I stay fully focused and for that moment forget about any other personal problems or other responsibilities taking over my head? It goes back to a question I answered recently. It goes back to your personal life, right? Sleep, diet, gym, right? If these three are well maintained, your concentration levels are automatically going to go up. You know, I think like I'm probably going to make a video on this on the introduction aspect of the training, because I think a lot of people kind of have a hard time with this. But your sleep, gym, diet, all three things make a huge impact on concentration. Water, right? Having proper water intake, not having too much coffee also is good for concentration. Some people think, oh, I'm going to drink 5 cups of coffee a day and my concentration is going to go up, but I'm not sleeping at all. No, like these things all have to be maintained. That's number one. Number two is, once again, meditation. I think meditation after 30 plus days, you start seeing results on concentration, focus levels, all those things start getting a lot better. And then I think the third thing to kind of do is the days you have a lot going on in your personal life, don't trade. Like just don't trade. Let's say you have a lot of personal things going on, and your head's all over the place. Just don't even open up the computer. Don't even say, I'm gonna open up my computer and look. No, don't look. The days I have a lot of things going on, I don't even look at a chart. And people ask me, oh, did you see what happened today? I'm like, I don't know what the hell happened. I didn't look. I have too many other things going on. So if that's the thing, those days take off, that's gonna be hard for you to build momentum. But I think that's very, very necessary. And then your responsibilities and personal problems and all that, you just got to time block, get better at time management, know when to handle certain responsibilities, know when to handle trading, and kind of put all those pieces in together. All right, got the trade. So let's see the trade. Okay, more. Here's an example about me chasing. And AMD entered at 1327.41. So that was today, I'm assuming. Had a level around 39.65. Saw a big red 1 minute candle with volume 40s in and executed. Okay, let's take a look at AMD. I'm assuming that was today, right? Right. Yep. Okay. So let's check the 1 minute. Now, just two things. When you're trading, and this is just basic trading thing, guys, don't strictly trade off the 1. Trade off the 1 and 5. Use the 5 as well. So if you want, you can set up something like this, right? And have the 1 set up and have the 5 set up as well. Okay. Now, when you take a look at this, right? Now you have the 1 and 5 set up in conjunction with one another. So now when you look at this, we're looking at 1327.41. Okay, 1327.41. Right, let's go to that time. So you're looking somewhere around here. Okay, so you took this trade. So you entered as puts or calls? Okay, cool. Now you entered, let's go over your entry. Obviously looking back at this now is kind of, okay, 27. Okay, this volume 27. So this is where you entered. Okay, you played next week 39.5. Okay, that's all fine. You had a level around 39.65. Okay, I see why you had your level there. You had your level because of most likely that. Now that level got broken. What time is it? 27. Let's go check that time frame too. 25, 27. All right, what is this? 30, 58. Let's go to 58. 27. Okay. Now, so when you look at this, right? Based off price action, I think it looks pretty straightforward, and I think I kind of break this down into mechanisms of traps. A lot of times, what you have to understand, and I think if you look at this throughout the day, it's a very straightforward kind of equation, and it's hard for me to be spot on with this because I didn't see the tape at that time. But there's two things, right? And this is just kind of like a wake-up call to a lot of people trading. When you guys see a lot of simple plays, like think about it, like this is in part 5 in mechanisms of traps, right? Look at this. This is the low of the day, 39.60, right around there, low of the day. Stock is getting to 39.60. So question, right? Let's think about this for a second. Do you think we're the only ones that kind of see that? No, we're not the only ones that see that. That's number one. Our mind is wired to look at this because it's a very straightforward play. Now, me seeing that this is one level, there's a lot of different factors that could play. Factor one could be a lot of people entered here, 10 a.m. market is reversing. A lot of stops are placed here. There's probably a lot of stops here. That's number one. Not saying there are stops. I don't know what the situation was, right? Number two is a lot of other people are also looking to possibly enter here. That's the next thing. Beyond that, another thing is it's also 1 p.m. Markets are not so great at this time. Like I mentioned, you're kind of trading against market makers around this time. They're stopping out people. They're exchanging shares between one another. If this was like 10, 11 a.m., cool. But something around 1:30 is kind of tough. That's why I don't like trading around these times, because there's too much chop, there's too much noise going on. So number one is the timing of this trade, I am not really a big fan of. Number two, besides the timing, I think it's a clear level, and it's too simple. And my problem with trading is when I see something that's too simple, I have a very hard time taking that trade, because it's kind of like, okay, well, like what's going on here, right? There needs to be a setup. I'm not the only one that sees this. That's another thing. Now, with that setup also being set up around a certain time, in a trade like this, I would personally rather wait for the stock to get a little bit more away from that area. Now, the reason for that is because in this area, there's probably stop losses. Maybe a lot of people entered, placed their stops. Market makers are stopping them out on this candle and maybe continuing. So what I would want to see is I would maybe want to see a strong 5-minute close. This is a 1 minute. I'd want to see a 5-minute close. So a 5-minute close would be, okay, what time is it? When this closes on the 5-minute range and I see a strong 5-minute close and a continuation, that's when I would maybe look to sell or look to enter the trade. Now, if you look at this, first, boom, it drops hard. Now you can see that hard drop, a lot of volume kicked in. Now that volume does not mean that's selling pressure. That volume could be stop losses getting taken out. A lot of people maybe had stop losses, low of the day. Stops are getting taken out. Maybe people entered here and placed their stops. No one knows. But that right there could be that concept as well. That's the trap. So once again, if you go in part 5, mechanisms of traps, this is a perfect example. Boom, people are still chasing, volume still goes high, moves down for 2 minutes, and you can see. Now, if I look at this now, that's where it's sometimes like that little patience and seeing something clear on and processing that information very quick is important, because now if I look at this, I'm like, okay, now I know buyer stepped in here. Now I also know stops have been taken out. Now if it continues, size up and take this trade out, right? This is where it's like, all right, I'm ready to size up, because I know this could have been stops and this could have been market makers taking shares, a lot of different concepts. So if this gets stopped out, cool, I'll take the trade. And you can see now what happens. Simple trade right there, market makers just taking shares. That's what happened. That was a simple trap, and you can see too choppy. So just to recap this real quick, I mean, I see why you got in on a price action, simple price action concept. It makes sense, but as I mentioned, there's more to it. Something too straightforward, way too simple, trying to get out at that level. Obviously, you know, I'm not surprised that there's traps. Look at the time too. Not the best time to trade. Trading should be around here, right? I think beyond that, market gets too choppy, gets too hard to kind of trade. So I think that's another factor. And yeah, in this situation, I would have waited. Now, if this was maybe around, I don't know, 10 a.m., 10:30, and I seen something like that, strong move, I would have probably taken the trade. But here, the timing, I'm like, I wouldn't even really be in front of my computer, to be honest. But yeah, the patience aspect in that is, I don't think the time, like just I don't trade around that time, not the best time, unless there's a lot of market movement going on, and usually there's not around that time. All right. Thank you so much. No problem, man. Yeah, just switch up the time, and that's really about it. And you'll see, like, guys, that's a very important thing for you guys to understand just a little bit on the trading side. Make sure you guys check the time. But when you're trading and you're losing money, like, look when you're losing money. Like, stop trading after 11 or 12 p.m. Like, do not be in front of your computer the whole day. Market gets very dead and very choppy. You're just gonna burn through money doing that. Just step away from that and take it from there. Good trade, but this is legitimately, I think, a very beautiful example of the market setting up a trap for people to jump in and take the trade from there. All right, I'm gonna go over a few more questions. A lot of questions today. All right, I'll get through as many as I can. It's gotta be off in a little bit anyway, so I'll just do a little bit more. All right, so Hey Umar, I started my trading account with 3,100 2 months ago. I had a huge red week and brought my account down to 600. Wow, very big red week. Took this week off trying to figure out what I did wrong, but now I have no confidence to get back in. What would you recommend me to do to gain confidence? First things first. If you had a very big red week, you have no risk management. Very simple to look at what you were trying to do here. I'm trying to get rich quick overnight, probably, number one. Trying to make a lot of money. Number two, you probably took a big hit when you started and you were trying to work your way back up. And you mentally said the only way I can work my way back up is by taking on large sized trades. Not a good idea. And third, your risk management is like terrible, right? If you're trading options, explains it, but you're this right here needs to be worked on. Now, going on to your confidence, obviously your confidence is going to get destroyed, especially after you put in 3,100 and now you're at 600. Go watch the webinar before the last one. I think it was in November. Watch that webinar. I kind of walk you through this concept of like how you should approach the market after losing money, because once you lose money in the market, coming back from that is very, very hard. So go back, take a step back, and kind of watch that webinar just to kind of understand that concept, because I break this whole thing down, what to do when you have or when you do lose a lot of money. Now, the confidence thing, once again, takes time. You need to build on it. I think if you do add more money, keep it minimal, but I think you need to go back to each one of your trades and see why did the big red week happen. Probably risk management, obviously, like I think that's a given. You probably didn't have a proper plan, and you were probably trying to make a lot of money. So I think identify that problem first before you even jump into confidence or jump into getting back in trading. Understand that confidence, maybe it was because you lack some trading skills. Maybe you have a hard time executing. Maybe you have a hard time exiting. Maybe you're trying to make a lot of money. Whatever the reason is, needs to be understood, and then you need to build yourself back up. But go back to, I think it was the webinar in 2 weeks ago from today. 2 weeks ago, I go over exactly the same concept. I have like a full 15-20 minute video on it. So just check that and I'll break everything down. Next. All right, I have a problem on when to enter, exit a trade. I'm not sure if I should look at the 1 minute or 5 minute count. Thanks, me. All right, so when you're trading, it depends on how you're trading. That's number one, right? I think you need to. Okay, so you're scalping. Now, if you're scalping, you need to look at these small time frames, right? Now, I mean, you need to look at the 1 and 5, but I think the closing of the candle is very important. So if you're scalping, the closing of the candle is very important. You need to understand time and sales. You need to be able to read that very well and very quickly. Your order execution, once again, has to be at a very high level. Now, beyond that, I think you need to use 1 and 5 together, but your closing of the candle is very important. Now, what do I mean by closing of the candle? Now, let's say, for example, a stock is breaking out. If a stock is breaking out, you want to be able to look at the 1 and 5 in combination, and you want to see what the time is. Now, if the time of this candle is, let's say 10:04, 10 seconds, you're 10 seconds in, and it looks like this, right? Let me just make it green. It looks like this, right? It's kind of tough to think that this is a breakout. Now, if this candle goes to a 10:04.50 or 55, and it looks like it's going to close strong, that's when I would probably look to get in, right? But you have to use 1 and 5 in conjunction with one another. You have to see what the 5 is showing you. You have to also see what time frame you're on, because sometimes the 1 minute might look shitty and then it starts dumping the next 4 minutes, or the 4 minutes are strong and the last minute it pulls back. So you need to look at all of them and combine them together to kind of break it down. All right, I'm gonna do last one, the last two ones. I know you recommend a computer for trading. However, I work 7 to 4 full-time and only am able to trade from my phone. What do you recommend until I'm able to convert my focus and efforts to full-time trading and no day job? I don't think you should day trade. I can't. For me to day trade or for me to scalp, I need to have my computer. I need to be in front of my computer. I can't just open up my phone and trade. I'm just not comfortable with that. You obviously miss out on a lot of information. So I think until you get to that point where you're able to fully trade or fully put your focus into it, I don't think you should day trade personally. Just build up your skill sets, take it one day at a time, and just try to get better at it. But if you're day trading, you need to be in front of a computer. It's a given. Like, you can't just look at a phone and trade. It's not really possible, to be honest. Okay, I'm gonna do a last question. A lot of questions. Wow, a lot of people joined today. My question is how to get better at processing information in order to execute faster. Does this come purely from practice? Yes, there's some people just that are kind of born with the idea of being able to process things a lot quicker than others. But then it's also, you got to understand, our brain is a muscle. The more you exercise it, the stronger it gets. So obviously, the more practice you see, the more confirmations you see, the more proper quality screen time you have, the better you're gonna get at executing things, right? So if you just start trading today, or a week ago, or a month ago, and you see a trade, your mind is gonna think about too many things because you haven't seen it happen a lot of times. But once you see a similar play happen consistently over and over again, you start building muscle memory. Now you start building muscle memory. You start being able to process that same information quicker, because the gateway from like let's say point A to point Z is much quicker, because all of the information or thoughts that you're gonna have already happened so many times, so those brain waves just go in much quicker. So it's just, the whole idea is getting as much as practice as you possibly can, screen time, and obviously, you know, getting your mind at a higher level by meditating, by getting proper sleep, by eating well, by going to the gym. Just the gym itself, and I don't mean like hardcore working out, I mean just going and jogging for 30 minutes itself does a lot to your brain. And these are all things you guys can look into, and I think you should. You'll see how all these things play such a huge role in trading, and how it's going to affect you in such a positive way. So check all those things out. Very, very important. With that being said, I'm going to end the webinar right here, 6:30. If anyone's question was left over, I'll answer it on the next week's webinar. There are a few questions I was not able to get to. So I will see you guys on the next webinar. Have a good night, and good luck trading tomorrow, guys. Take care.